Good morning, ladies and gentlemen, and welcome to today's tax chat. It is the second tax chat of 2025. And as always, we really appreciate your support and we appreciate you taking the time off your busy schedules in order to see what we have to say regarding our budget speech of yesterday. Without further ado, let me just get into the slides. Sure that works. Okay, hang on, sorry. It seems. Let's go back. All right, we're on the budget. So in the budget speech itself, I must say, as I read through the budget speech, it's just about 20 pages. Not much has been said. I think, a very superficial budget. It addresses just a few things, but for me, and I've been doing budget seminars literally since 1995, and so there's a good 30 years that I've been doing it. And as budget speeches go, I think it is one of those that have the least substance to it insofar as addressing issues of concern of the country and addressing things like corruption, service delivery, and all those kind of things. It says the nice things about we will spend on infrastructure and the like, but obviously all of this has all been clouded by the whole VAT rate thing. So yes, when we spoke last time, the budget speech was first postponed because they wanted to increase it to 17%. In my personal view, I thought they will settle halfway and they'll go for 16%. And now they have said, okay, we will go for 0.5% now and next, and within 11 months later, 0.5% again. For me as an accountant, this is the worst scenario ever, apart from obviously going to 17%. And I'll get to that now, because administering two VAT rate increases within 11 months is just placing a burden on vendors that is just absolutely not necessary. So you could see that this decision was a political decision. It was clearly not an accounting decision. And the poor vendors out there and the accountants and the advisors, we now need to make sense of this. And when the VAT rate increased from 14% to 15% way back, only 1 April 2018, we did a huge amount of work in helping clients in order to navigate that increase. And I'll get and I'll spend most of today on talking about all those issues that may face you as you have to navigate yourself between a 0.5% increase now and a 0.5% increase later. So the minister expanded a bit more about these alternatives, and he said, well, we decided to go for the VAT rate. And then he expanded why didn't go for personal income tax rate. But well, on the personal side, we will see now that they've just left everything the same. So for 2 years running, we've not had an inflationary increase, and that's putting 18 billion rand in their pockets. So there is, in effect, a personal tax rate adjustment because they're not adjusting the tax tables for inflation. So people are just getting poorer and poorer and poorer. So it's a bit of a sneaky one, that one, and it's overshadowed by the increase in the VAT rate, but it's actually got a bigger effect than it. They talk about increasing corporate and personal corporate tax rates, and they've decreased it from 28 to 27%. I suppose they could have taken it back, but they've only decreased it 2 years ago. So that would be strategically felt. Listen, you don't know what you want to do. You need to create a stable country with stable tax returns and tax rates. And if foreign investors are looking at it and say, yeah, you go from 28%, 27% to 28%, just make up your mind what you want. So they also say corporate tax collections have declined over the last few years. So we'll talk about that one just a bit later. And then so furthermore, South Africa's corporate income tax collections are already higher than most of our peer countries. So they are recognizing that personal taxes is higher than in peer countries. They recognize that corporate income tax collections is higher than the peer countries. And then they say, well, then let's go for the VAT rate. And they also clearly, and I like that we're not going to take on additional debt. But in the world that's gone mad, taking on additional debt where you're going to get that. And at what price? So he says VAT is a tax that affects everybody. By opting for a marginal increase to VAT, is distributional effect and impact were cautiously considered. the increase is also the most effective way to avoid further spending cuts. So, and as I said in the previous tax chat, when the increase from 14% to 15% happened, government budgeted for about 38 billion rand that they'll get into additional income just out of that increase in the VAT rate by 1 percentage point. But what happened on the VAT side, they fell 22 billion rand short from their budgeted income. And then the corporate tax rate, they fell 12 billion rand short from what they budgeted. So even though you budgeted 38 billion rand more just from the increase in the VAT rate, the corporate tax was just flat for that year. It had a 0.6% increase from 2018 to 2019. And why is that? The combination between it, people don't have money to spend. So they will sit there for 1 year and now the VAT rate goes up a 1 percentage point. So what do? You reduce your spending because you've only got finite income. You can't just infinitely spend. And then to the extent that you are not reducing your spend, then the corporates had to absorb it, resulting in less corporate income tax rate. So in that year, it was quite funny. The net effect was a 4 billion rand gain, which is like nothing. They budgeted 38 or 36 billion rand more. They fell short 12 billion rand on the corporate taxes, and they fell short about 22 billion rand on the VAT rate. So now they're saying, well, let's sneak it in. 0.5% is not going to affect spending so much, particularly because the interest rates came down. But I'm not, it will have an impact, and time will tell where we're going to be. So, what do they want to do in making sure that your vulnerable households, they want to increase social grants above inflation, and then expand the zero-rated food bucket to include canned vegetables, dairy liquid blends, and organ meats from sheep, poultry, and other animals. So this is generally, obviously, the food that the poorest of the poor survive on. So I think that's probably a good thing, but it's probably overdue. So, I mean, whether it's now at 15.5% or 15%, it's overdue. And then the good news, I suppose, is that the fuel levy will not be increased this year. Let's just see on what they are thinking is going to happen. This is the wish list. This is the wish list from the various sorts of taxes. So if you look at the total tax revenue, so I've not taken the other revenues in, just purely the tax revenue. From 22, it was 1.5 billion, went up to 1.7, then increased about 6% to 2024 to 1.7 again. The current year is a 6.1% increase. And then for next year, you can see they are budgeting an 8.7% increase. So the current year fell short by about, I think, 12 billion rand or something. And I'll get to that slide now, but it fell short somewhat, so they want to recoup that, and then they want to increase it to 8.7%. So they almost want to recoup the current year losses and then have a gain of maybe a 6 or 7% increase. And then 7.8% increase, 6.7% increase. But if you look at the inflation and the cost of living and everything, you still make 6.1% increase in actual absolute revenues. And that's not what the average person in the street is getting. And then 8.7% for next year, that's obviously taking more than the fair share. It's taking, so what happens is the population is getting poorer, more money is going into government. Anyway, so what is our Minister of Finance asking? So he is asking, just minimize that. So he is asking, I call on all South Africans to comply with the law and support SARS in its endeavors to collect the revenues that enable government to fund and provide critical services. Obviously, we agree with that because as professionals, as tax advisors, as registered tax practitioners, the sovereignty of the law is central to it. Also want to emphasize the importance of tax compliance. Yes, I think all compliant taxpayers should pay their fair share of taxes. Thank you, Minister. I also encourage those that are not compliant to do the right thing. So yes, let's do the VDPs. Let's get everything up. So, but this is not a one-sided story. This must be a double-edged sword. So let's see what our Auditor General, Ms. Maluleke says. So when you talk about municipalities, she says compliance with legislation remained the biggest obstacle for municipalities with 86% receiving material compliance findings, slightly regressing from 85% in the previous year. That's a 2023 report. That's a 22-23 report. The 24 report's not out yet. Okay, so 86% are finding material compliance. So let's see what they are saying for and national and province levels. Non-compliance with key legislation remained high, with 60% of auditees materially, not somewhat, materially, not complying with key legislation 2023-24. Most of them being high-impact auditees. High-impact auditees are national and provincial entities and state-owned entities that provide high impact on the country, that creates economic stimulus. And if you bugger it up, you bugger up the country. Now, 60% of them are materially not complying with the key legislation. Now, look at this statement. It's not what I'm saying. This is what our Auditor General is saying. Non-compliance with legislation resulted in irregular expenses of 406 billion rand over the 5 years. Do you know how much 406 billion rand is? I mean, if you compare that to that, 406 out of 1.8 trillion is almost a quarter. It's almost a quarter of a gross tax revenues, which he said has been spent over 5 years. That's 20 billion rand per year over 5. No, a lie. It's 40 billion rand per year over 5 years. It's just mind-boggling. I've looked out 406 billion rand. If you can build a school, fancy school, for 200 million rand, that's 2,200 rand, 2,200 schools. Imagine how many students you can allow to study for free at universities with 406 billion rand over 5 years. Imagine the impact you'll have in the country. So, Minister of Finance, I want to say yes. We agree with you. Tax compliance is important. But please set an example. As a government, please set an example. How can you ask people to be tax compliant, which we want to be, but then the money that comes in, the government itself is just not worried at all? So also saying, what is she saying here? So she said the 10-year review of the NDP published by the Department of Planning, Monitoring and Evaluation in March 2024 serves as a sobering reminder of the work that lies ahead, with only a few years remaining to reach the 2030 goals, 5 years. The review highlights the capability of government is at the center of building a developmental state. Agreed. But poor productivity, corruption, state capture, wastage, and a lack of accountability have all undermined government's efforts to build state capacity. The Auditor General picks out this lack of accountability as the biggest single issue, that people are non-compliant with the law with impunity. With impunity. Now, if you are just a month late with your personal tax return, you get hit with an administrative penalty. And it just goes up and up and up, and every month it's there because you need to be tax compliant. So a lot of people are becoming tax compliant just because of the tax compliant or of the non-compliance penalties. And there are laws, the PFMA, the MFMA, all of those things are laws to protect the public against fruitless and wasteful expenditures. But what happens year after year out of year? Auditor General just reports on this. Frankly, if I was president, I will appoint Ms. Maluleke as the Minister of Finance. I think if you want to do yourself a favor, go on to the Auditor General reports, go and read what she says. It is such sobering, but it's objective and it is real. But it's also very, very concerning, because government needs to understand that you cannot have 406 billion rand being considered irregular expenses over 5 years, but yet you're just continuously raising taxes, and yet you're continuously asking your population to just give you more and more money and be more and more compliant and just be happy with this. And last year's elections have shown that people are not happy with this. But now you're ending up with a marriage of a forced marriage between various parties, and a forced marriage is never a good thing, because I mean inherently there will just be fights and fights and fights. We can say that perhaps the forced marriage has now led to us only have a 0.5% increase instead of a 2% increase. I would like to see some of this forced marriage coming in, because if you look at the commentary that was made Yesterday, the EFF just said, no, you can't increase the VAT rate by 0.5% and 0.5%. Tax the rich, tax them more. So let's see what happens. Okay. Now, the Minister of Finance is agreeing with the municipal side. He says the decline in municipal services is evident across cities, towns, rural villages, highlighting the systemic challenges faced by the varying groups of municipalities. So who's to blame? Who's to blame? And I was just thinking, of course I need your input. How else can I accurately assign blame? So now I can blame a lot of people because they're all in the government of national unity. But the question is, who's to blame? Who's to blame for the decline in the municipal service deliveries? Who's to blame for 400 billion rand of fruitless and wasteful expenditures and irregular expenditures only in a 5-year period? That excludes municipalities. Now that excludes municipalities. Shocking stuff, shocking stuff. Anyway, so let's get to revenue trends and tax proposals, and let's just see where that leads us. So this is the actuals. So you can see they fell short by about 16 billion rand compared to what they thought they were going to get. Real growth of about 6.1%. But if you look at where it actually came in, obviously the big collection areas is personal income tax. That's 12.9% up. But there's always an interplay between personal income tax and corporate income tax. So it's 12.9% there, and then just a 1.1% growth in corporate income tax. So you can see the more salaries gets paid, the less corporate income tax. So look at the burden, overall burden. So the big taxes is the personal income tax. That accounts for almost 40% of the total. The personal income tax, the corporate income tax is half of that. It's only about maybe 20% of the total. And then we get to the transactional taxes, and there's your VAT, which already accounts for 460 billion rand out of the 1.8 billion rand. So it's up there in importance. And then you've got the fuel levy and all those kind of things making up the balance. But you can see the value added tax only went up by 2.8%. So they're looking at it and they're saying, well, why is this only going up by 2.8%? It's because consumers are just overburdened, and they just can't manage with it. So it's directly related to spending. Anyway, so that is what it is. So what are the proposals? And if you look at that, there is effectively 28 billion rand which government wants to in through this. So everybody goes and say, oh, the VAT rate, oh, the VAT rate, the VAT rate. Of the 28 billion rand, there is only 8.5 billion coming out of that. The big chunk of it is that there is no inflationary adjustment to the tax brackets. So that's a sneaky move because everybody throw out their toys in the cot on the increasing the VAT rate. But the sneaky move is that our personal income tax brackets is now the same as it was for the 2023 year. So 23 year, sorry, so the 24 year, the 25 year, and the 26 year, there's been no inflationary adjustment. So as you go into new brackets, you may find yourself getting a 3% increase in salary, maybe a 5% increase in salary, and actually have a reduction in net take-home pay. That's the impact of not adjusting those brackets, because if you're on one bracket and you move from a 31 to a 35% scale, as you move to the 35, if you get 3% increase but a 4% additional tax, you might as well say to them, please don't give me an increase because you're worse off by 1%. So that's the sneaky one of this, and you can see it's the biggest chunk of it, because the medical tax credit has also remained the same for 2 years. Now this is remaining the same for that period. So it's 19.5 billion of the 28 billion. Only 8.5 billion comes out of indirect taxes this year, but again they've sneaked it in. So next year that will give you another 23 billion. So that's the big effect that we'll have, is the cumulative effect. So it's the 0.5% now, which is 13.5 billion, and the next year another 15.5 billion rand will come from there. And then the fuel levy, it seems that they are, but I don't trust that. Next year we'll see an increase in the fuel levy again. So that 4.2 is just nonsense. That's not going to happen. So I think that fuel levy now is a minor one, and then the above inflation increase in our sin taxes of R1 billion. But the biggest issue in this budget is actually not the increase in the VAT rate from a effect on your pocket side. It's the fact that the second year running we've not had a personal income tax increase. All right. So there we are on the same basis. But as you can see, I mean, if you are currently on 510,000 Rand per year, and somebody gives you a 3% increase, that 3% increase, SARS will take 5% of it. So you move from 31% marginal rate to 36%. So you'll be worse off. If you're on 512,000 Rand, you move into the next bracket. SARS will take 5%. So if your increase is not at least 5%, you're worse off. If you move from, and that's the hardest hit. But also, I mean, now we talk about the effect on the poor. Somebody that's at 370,000 Rand. If you're 370,000 Rand, that's 30,000 Rand a month. If somebody gives you 5% increase, you'll get zero extra money out because you're moving from 26% to 31%. Remember, it's the marginal side that goes up. So if you're in that bracket, if you're earning around about 35,000 Rand per year, and you're moving from 26 to 31%, then your increase source will just take everything. They'll just take everything. You get zero increase. So it's better to go to your employer and say to him, you know what, just keep the money. Just keep the money. Don't give me any money because all that you're doing is you're just giving all the money to SARS. It's madness. It's absolute madness. The same applies the person going from 1.8 million, because then that increases 4%. So once you're at 1.8 million and somebody gives you a 5% increase, you'll only get 1% take home pay of that. Only 1%. And now the VAT rate goes up by 0.5%, so now expenses goes up by 0.5% again. Anyway, so they were talking, the EFF, I was saying, the EFF was saying, no, don't increase the VAT rates. Let's tax the rich. As I said, there's being the tax. In this country, 60.4% of the total personal tax. Now remember what big chunk of the total bucket personal tax makes out. 732 billion of the 1.8 billion is made of personal tax. 60% of that is collected by 6.7% of tax registered individuals. There are 14.5 million tax registered individuals. There are 60 million people in South Africa, of which only 14.5 million are registered for tax. So it shows unemployment or just disregard for tax legislation. And 60.4%. So out of the 811 million to be collected, that's for next year. 60% of that will be collected from 6.7% of them. It's less than 1 million of the 14.5 million people that are registered for tax. And this is a problem because people may say, but hang on, it shows the inequity in the country. Now, how do you address inequity in the country? How do you get people to go up and earn more salaries? There's only one way. Education, 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 education. And that's the only way you can push people up. So I'm asking you, in the last 30 years, how many new universities have been built by our government that is on the same level as what is a WITS or University of Joburg or a University of Pretoria, University of Cape Town or University of Stellenbosch? How many of those high world-class universities have been built and have been run? Not one. Not one. So the private sector has filled that gap. But it's not a government thing, because how do you push people to go up that scale? It's only by education. So how can you get an employer to pay more to an employee? It's only if that employee is more skilled. There is no other way. There's no other way you can do it. So then again, ask myself, what could government have done with 400 billion rand over the past 5 years on this level? Could that not, and I'm not saying give tax cuts, I'm saying just spend the money wisely. Don't waste it. Spend it wisely. Spend it on the right areas where you should be spending it. Transit duty tables have been adjusted. That's the only hope in this whole budget that we've had. So it's a doom and gloom budget. And the employment tax incentive will be adjusted slightly with inflation. All right, so let's talk about us as accountants, because us as accountants now have to make this thing work, which government has said. And government, in their infinite wisdom, between all these politicians, decide, hey, let's increase VAT twice in 11 months. In their infinite wisdom. And the vendors are saying, they're saying, you're asking us to manage this? And I probably think SARS and the Commissioner for Inland Revenue, Edward Kisworth, is asking us to police this. You really? Because now we've got to change. And if you can recall back in 2018, you now had to change the VAT 201. The VAT 201 has to have a line for VAT at 15% and then a VAT at 15.5%. And then next year, you've got to have one for VAT at 16%. And believe me, as we'll go through these things, you will see that you may actually end up in 2026 with 3 line items just with the different VAT in VAT rates. For me, the big issue as well is we've been talking about the VAT modernization program, and the VAT modernization program was because the VAT administrative system has remained archaic and is still archaic, still based on a batch system. Companies with billions of rands of turnover, they put in a little form with 3 pages and they pay their money to SARS. SARS has got no visibility about it. You can't check. You can check 5 or 10 or 20 selected items. You can't check every one whether the VAT number is relevant. Or there's so many things, places you can hide. So the commissioner said, let's modernize the VAT system where as I take I can do that now. The technology exists. I can say, okay, I want to issue a tax invoice to that client. And I go there and I pre-populate that client with their VAT number, their address, and everything else. And as I send them an invoice, SARS is informed of that VAT rate. Immediately they say, I will have to pay the output tax because I put the VAT in there. I've issued the tax invoice through a system. And at the other side, you can only claim the input tax if somebody else has paid the output tax. You can do that. The technology exists. I mean, we've got a very sophisticated banking system. We've got a very sophisticated. It can happen. You just. How many years do you think that process has been put on the back burner with numerous VAT rates to adjust for? You've got a 15%, 15.5%, and then 16% rate. Probably going up to 17% over time because it's sneaking it in little bit by little bit by little bit. But now we've got to administer it. So they're obviously defending it, saying from a VAT perspective, we are still low, compared to other entities. They're comparing ourselves to Germany for Pete's sake, and to Sweden for Pete's sake. But you've got to look at the basket. So it's all about optics. You say, yeah, but our VAT rate is low. Yes, but in your same time, you said the personal income tax rate is too high, the corporate tax rate is too high. You've got to look at the basket. There's a person like me who earns a salary and I buy stuff, and I'm part of a company that pay corporate tax, and I pay personal income tax, and I pay VAT, and I pay excise duty. The basket is too high, so you can't just cut it out. So it shows you can do with statistics exactly what you want to do with it. All right. They've talked about then obviously expanding certain zero rating that we've talked about. So this is where the thing comes in for us as accountants and as vendors. So now you have to manage this increase. So for that, you need to go to section 67A of the VAT Act. But I've went back to a 28-page document that SARS issued in 2018, which was the frequently asked questions on the increase in the VAT rate. Now, those things will apply because that frequently asked questions applies to section 67A. So what I've done is I've now taken some of those questions that I think are more relevant and more contentious than some of the rest, and I've just copied them into the presentation. So in the next half an hour or so, I'll just talk about those things because this is a tax chat. I've now got off my soapbox, and I'm now back to being a tax advisor, and now I have to engage with my clients, and even with Creston itself, because we've got to manage this ourselves. And as a a firm of accountants and a firm of auditors, we need now to manage this increased VAT rate as well, okay, which comes into effect 1 May. So it's 1 May, and then 11 months later, 1 April, we've got another one. Yeah. How will the increase affect me if I'm registered for VAT on the payment basis of accounting? Now, remember, so if you're like a municipality, the municipality is registered on a payment basis. So you will issue an invoice for your water and electricity in the month, and that will trigger the VAT rate at that point in time. And then as and when you receive payments, you will pay that VAT over to SARS. Now, if you raise the invoice now, then you raise it at 15%. But if you collect the money in 3 months' time, you pay the VAT at 15%, not at 15.5%. So it sounds easy, but no, I mean, your system's got to be able to manage that. And the municipality system's got to be able to manage that. So that is a tricky one. So now the people who are generally registered on the payments basis are your associations not for gain and your municipalities. Now, associations not for gain, they generally don't have sophisticated accounting systems. So it becomes very, very tricky for association not for gain to be able to manage these kind of things. And the numerous VAT rates. And remember, now I've got to put it in the right block. So in your new VAT 201 form, you'll have a block at 15.5% and a block at 15%. So now you receive a payment from a person for the last 5 months of invoices. The municipality comes, the guy couldn't pay. They tried to squeeze the money out of him, and now he's paying for everything from January 2025 until June 2025. Now, part of that, they now need to allocate and put it under the 15.5% block and under the 15% block. It's mind-numbingly difficult to do that. Okay. How do I know which date to use as the transaction date for purpose of determining the VAT rate? So there you need to go to time of supply rules. So they address then the time of supply rules. So you've got to go back to the VAT Act. And generally, people don't worry too much about the time of supply rule. It is quite important, okay? But sometimes the people say, well, if I pay it in January, I pay it in February, it's not, it's a potato. It's not a big issue. So often, for example, people will pay in advance, and you'll have a debtor and credit or something, and they pay it in advance. Say, well, okay, I'll pay it next month when I invoice him, something like that. Generally doesn't, it's a timing issue. So you can kind of like still say it's a palatable risk, but no, it's actually a VAT rate issue as well. So if you get your time supply rules wrong over this period, then you can end up underpaying VAT. All right. So what is the general time supply, which applies to most transactions? That's your general rule. The general rule is a date that any payment of the VAT inclusive price, any payment of consideration is received, or an invoice is issued in respect of the supply, whichever occurs first. So that's your general rule. So it's the earliest of when I receive any payment or when I issue an invoice. So it creates a problem where you receive a payment, but you've not issued the invoice yet, because your ERP system generally triggers the VAT supply only when you receive the invoice. That's why it's critical to look at your debtors and credit at the end of the month, because often what happens, and especially in routine things, MTN, your telecom, your people, things that you pay on a monthly basis, you would just municipalities for that matter. I often just go and I say, well, okay, I'll look at my municipal bill and I'll say, okay, it's so much, and then I'll put on my banking app and I'll say, just pay every month, maybe 10,000 Rand a month, just pay 10,000 Rand a month for the next whatever. Then I know, and then I'll just check that I'm maybe in the money. So many people does that for routine things. You may do that if you have you're renting a storage facility. Just put it up and then see where it ends. Okay, but you've got to apply that general rule. But there are special rules as well. So there are supplies between connected persons. So you can go look at question 10, ongoing continuous supplies, installment credit agreements, lay-by agreements, fixed property transactions. So let's see a few of them that they've talked about. How will the increase work for ongoing contracts, such as supplies made under rental agreements, construction and cleaning contracts, insurance and subscription services? So now it becomes difficult now, because there are many companies that rent out photocopiers and they rent out furniture and they rent out buildings, or they have a monthly maintenance agreement. So So successive periodic onto continuous supplies, the VAT rate is determined based on the earlier of the date when payment is due or is received. And, and so you don't worry about the invoice date. So it's just the earlier of the date when the payment is due or received. So you say to somebody, I've got a monthly cleaning contract with you. You have to pay me in the first of the month. Okay? Then on the first of the month, even though I've not received it yet, even though I've not issued an invoice yet, or I may issue an invoice automatically on that day, then the VAT gets triggered on that time. So you have to see, especially if people pay in advance, that you may have a 15% rate or 15.5% rate. Okay. Progressive supplies, the VAT rate is determined based on the earliest of the date when payment is due or is received, or any invoice for payment is issued. So this includes your construction, manufacture, or assembly of goods, where the agreement provides for the purchase price to become due and payable according to the progress made. So progressive supplies is where you've appointed somebody to build a house for you. When you say to them, listen, based on my progress certificates from the engineer, I will pay you that amount, that amount, that amount. So then it's triggered whenever you issue the invoice, when you receive a payment, or when you receive a payment is due. So another one, this one adds a dimension, is when it's due. Okay, so when it is due. So how does that impact you? How will the increase work? Now, this one is quite important here. I know about a church. It's building a big new church. It can't claim the VAT because it's a church. And this 0.5% and 1%, it adds a significant amount to the budget. So this will become important for them, because they will have, so, okay, once the foundations is laid, we will pay 10% of the overall. Then once we've got at that level, we've got so much something. And it's a huge project. Now you have to manage that VAT according to that, but also they're not short. They're not short on their budget. And that impacts them. And the fact that you have signed the contract beforehand doesn't really matter. You don't have anything that helps you there. How will increase work for installment credit agreements, such as installment sale agreements and financial leases? Now, that is not a progressive supply. So if you have installment credit agreement as defined, so that is you're going into installment credit agreement for a car, then the VAT is payable up front. Okay, so the time supply for goods supplied under installment credit agreement is the earlier of the date of delivery of the goods, or when payment or any part of the purchase price is made. So you have to pay the VAT at that point in time. So if you are a West Bank or a financing company, then the increase just will be triggered on that particular date. So if you've ordered a new car, then you may find that you've ordered it now, but it will only be due. You've ordered it now, but you're going to wait 6 months for it before it gets delivered. Then you're going to pay 15.5% on it. Okay, lay-by agreements. So a lay-by agreement is, if it's concluded, and that's before that date, and the payment required to reserve the goods was made to the supplier before that date, the old VAT rate will apply, because in the lay-by agreement, you pay the VAT as you have paid it. If such a lay-by agreement is cancelled and any part of the amount paid to the seller is retained, the seller must declare output tax using the old tax fraction, 14 over 114. So specific rules on lay-by agreements. If delivery occurs on or after 1 April, in circumstances that are not covered above, the supply of the goods under lay-by agreement subject to VAT at 15%. So sorry, lay-by agreement, you only pay the VAT as you deliver it. So now you pay. It's still actually your money. And once you've paid the whole amount, then they'll deliver the goods for you, and ownership passes at that time. So yeah, but special rules will apply to lay-by agreements. All right. Fixed property transactions is a difficult one. So you can see there, this is question 14 in that frequently asked questions one. So the rate of VAT for fixed property transactions will be the rate that applies on the date of registration or transfer property in the deeds registry, or the date that any payment of the purchase price is made to the seller. So generally, you would put money into the attorney's bank account, and then or selected there, and once it's registered deeds registry, then payment goes out. So that is the vast majority of it. So if a deposit is paid and held in trust by the transferring attorney, this payment will not trigger the time of supply. Okay. So normally the sale price of property is paid to the seller in full by the purchaser's bank or by the purchaser transferring the money. However, if the seller allows the purchaser to pay the purchase price off over a period of time, the output tax and input tax is calculated by multiplying the tax fraction at the original time of supply, the amount of each subsequent payment as and when those payments are made. So on fixed property times, there are funny rules. Your VAT rate is fixed at the date that it goes into the deeds registry normally. So that may be now. So it goes in at 15%. But you agree, and especially in connected party type transactions, you agree it goes onto a loan account, and then as and when you pay it, you will have to pay the VAT. So you can have a fixed property deal now that is then payable over 10 years, and you'll have to account for VAT for the following 10 years at 15%, output VAT and input VAT, because you only pay the output VAT, input VAT as the capital amount is settled. So the time of supply is triggered on the date, so the 15% is then triggered. So now, we can even now sit with situations, a fixed property was transferred in 2015, and it was still a loan account, and when you pay the loan account now, you've got to pay 14% VAT, and they can claim the 14% VAT back. So it becomes a nightmare whenever you have an agreement where the sale of fixed property is not settled immediately. It's only settled over time. And there's a few examples given on that. There was a rate specifically for residential property. I'm not sure, I did not double check whether that rule will also apply to, as a general rule, whether it was a specific rule. I would assume that they will do a similar type of arrangement. So is there a rate specific rule which is applicable to me if I signed a contract to buy residential property? Okay, so that is one where I can't claim the VAT. Before the rate of VAT increased, but payment of the purchase and registration only takes place on or after 1 April 2018. So then it is, yes, you will pay VAT based on the rate that applied before the increase on 1 April 2018. So that is 14%, not 15%. The rate specifically rule overrides the rules as discussed in question 14. So I've not checked whether that is specifically in the law. I will assume that it is specifically in the law. So if you're buying a residential property, a townhouse from a developer, the developer will have to charge you VAT. So if you already signed the contract and the contract is at 15%, then the VAT payable by the developer is then 15%. But you need to double check that. So if you are either the buyer of residential property or you are a developer, just check out 1667A, check what you'll have to do and see whether that happens. Okay. So the risk rate specifically only applies if you concluded a written agreement to buy the dwelling before 1 April 2018. Both the payment of the purchase price and the registration in your name will occur after 1 April 2018. So obviously replace 1 April 2018 with 1 May 2025, and then again 1 April 2026. The VAT includes the purchase price was determined and stated as such in the agreement. Okay, so there must be an agreement. So concluded means that the legal and binding contract was entered into by the parties, regardless of whether that contract includes any suspensive or resolutive conditions. Okay. So again, so you see complications. Okay. So residential property was defined in the frequently asked questions. Generally, when you go out and you buy a townhouse or house from a developer. All right. Will I be able to increase the price that I charge under existing ongoing contracts concluded before the increase in the VAT rate? So what they effectively say is you've got to go back to your contract. If your contract is silent, then you can increase it. If the contract is not silent, if the contract says, listen, I will charge you R1,000 a month, no matter what the VAT rate is. If I say, I will charge you R1,000 a month, then you've got to go back and see, what is my contract? Is my contract such that I can recover it? If it's silent, then it is recoverable. All right. But again, you need to go back now to your contracts. And especially if you've got large contracts, construction type contracts, can you now add it? It won't be a big issue if your client is a VAT registered vendor, because they'll normally say, well, okay, I'll just claim it back. But if I have contracted with a church who can't claim the VAT as input tax, or with a school that can't claim the VAT as input tax, or I've contracted with an individual who can't claim the VAT as an input tax, then I need to go and see whether or not I can change it. Don't just assume that you can change it. You've got to go back to the contract and see, can I do anything? Are there any rate-specific rules regarding the application of the increased VAT rate for supplies that span the date? Now look at this one. So this is a lekker tricky one. So the general effect of these rate-specific rules is that if a transaction was entered into before 1 April 2018, but delivery of the goods or performance of the services only take place on or after 1 April 2018, the following rules apply. In the case of goods, use the VAT rate that applies on the date that the goods are actually delivered or made available for collection. So that's your special rule. So goods, even if you sign the contract beforehand and you deliver it afterwards, you've now got to apply the VAT rate on the date that you've delivered it. In the case of services, use the VAT rate that applies on the date the services are physically performed or actually rendered. Okay, regardless of any rate-specific rule. So there are a few examples. So let's take this example. What happens if I actually delivered the goods or performance of the services before 1 April 2018, but the invoicing or payment only occurs after that date? So it says the VAT Act provides that you must charge VAT at 14%, even if the normal time supply occurs after the increase in VAT rate. This is explained by the example below. If a firm of auditors, like Creston, has actually supplied auditing services to a customer before 1 April 2018, but the invoicing and payment only occurs after 1 April 2018, the account auditing firm must charge VAT at 14% for the services, not 15%. So now, if Creston has got a huge amount of individuals as clients, if we do the tax return of a client, we've done the provisional taxes, we've done the tax return for February, all those kind of things, we do it all before the implementation date, which is 1 May 2025. If we issue the invoice at the end of May, we must still charge VAT at 15%. Would our system be able to manage that? Because now we've got to do kind of like an apportionment. We've got to make sure that, listen, and how do we do that? Because normally what will happen, often what will happen is that, let's assume a client has actually got a end of May year end. So we will do provisional tax calculations in April. We do a lot of the provisional tax calculation in April. We will submit it at the end of May, and then we'll bill the client for provisional taxes that we've done. Now, how do we apportion it? Now we've got to apportion that amount between 15% and 15.5%. Clearly, it doesn't matter too much if your client is a VAT registered vendor. But I remember back way in 2018, there was a big stink made by many of the big firms that they said, well, I can only claim if my supplier has incorrectly charged me with 15% instead of 14%, then I can only claim 14%. In practice, SARS didn't even worry about it. As long as there was equilibrium, they didn't worry about it. So, but clearly it affects you if your client is a non-vendor and they can't claim the VAT as an input tax. This would affect us quite substantially. I do recommend perhaps that 30 April, you clean out your WIP. You bill everything that you can in your WIP so that you don't have this nonsense. But obviously clients often, you do the work by 30 April, but you only deliver the deliverable afterwards. Now, do I charge 15 or I charge 15.5%? Because the client will say, I'm not going to pay you before I see my provisional tax return. I'm not going to pay you before I see my set of financial statements. I'm not going to pay you before you have signed off my audit report. Again, madness. It's just a 15.5%. And now we've got to double the madness now. This is not just a single madness, this is a double madness. What happens when goods are delivered or services are performed during a period starting before and ending on or after 1 April 2018 and the time of supply is triggered on or after? All right. An apportionment must be made on a fair and reasonable basis for the value of goods delivered or services performed before and after 1 April 2018. The value of that part which falls before 1 April 2018 will be taxed at 14%, and the value that falls after 1 April 2018 will be taxed at 15%. Now, again, when you look at an auditing firm, you look at a tax advisory firm, all those kind of things, it kind of like comes out in the mesh. You know, we will have on a work in progress maybe 30,000 Rand lying there of time spent, but we've agreed 20,000 Rand with the client. How do I apportion that now? Must I now take time and the time of a partner is like 5 times more than the time of an articled clerk. How do you apportion it? Because invariably the junior persons will do the work initially, and then the senior persons, the managers and the partners will look at it later. How do you apportion it? How do you apportion it? You can't just do it straight time based, because the partner time is worth more per hour than what the junior's time is. No, try and do that in practice. Okay. All right. What happens if goods are delivered or services are performed on or after 1 April 2018, but an invoice was issued or payment was received between 21 February and 31 March 2018? That was anti-avoidance legislation. So what it did was they tried to avoid people, because it was announced on 21 February, and then it was literally a month and 10 days later, the new VAT rate came in. So now we've been announced, what is it, the 12th of March, and then from 1st of May, so again, we've got 6 weeks. So they're probably going to be a similar kind of anti-avoidance legislation. So it says this rule applies, for example, when a vendor issues invoices or requests advance payments from customers to purposely bring the time supply forward to a date before 1 April 2018, when that would not be normal business practice. So be on the lookout for this question 21, which then is a specific anti-avoidance legislation that applies to that. Okay. Now, must I increase the price of products in my shop and in any price list before the VAT rate increases? So now picture this: you've got a big spaza shop. They don't have sophisticated barcodes or whatever, and on there they've got 1,000 items on there. Everything just got a sticker. It's costing me, this thing is 50 rand, 20 rand, 30 rand, whatever. That's a sticker that's on the price. Now, on the night of 30 April, that will include 14% VAT, and within 1 minute later, it will include 15.5%. Now your sticker says this price, but SARS says you can increase it by 0.5%. So your sticker price is different from the price that you're going to charge. So they say you may recover that increase in price. They say, therefore, it will be up to you, the vendor, whether or not you are going to increase the price of products in your shop from 1 April 2018. If you've got a huge store, it's going to cost you a huge amount of money if you don't change the prices. If it's electronic, so it's like most of your modern shops like Checkers and Pick n Pay Spar will have, it's okay. I mean, you can just change the electronic prices by 0.5% immediately and say, now that increased 15.5. But if you're not, then it's got to be a manual process. So they say customers will only pay the price they see advertised, quoted, or displayed, and therefore it's important for you to include VAT at the correct rate. It is also important to note that whether you increase your price or not, your point of sale and accounting systems must nevertheless be set up to charge and declare VAT on the final price. Similarly, if you have previously entered into any agreement in terms of which the offer was accepted before 1 April, then the additional amount of VAT may be recovered from the customer. Please note that if you decide not to increase your prices, you will still be required to declare VAT at the 15%. Think how difficult this is for somebody that has got a big store holding and it's all manual. Okay. Can I increase the price of products in my store to include the new rate of VAT without having to change all the individual price brackets? So they're saying here, in the current situation, permission is hereby given under that proviso for a vendor to display a notice to inform customers that the price does not include VAT at the new rate of 15%, and prices will be adjusted at the point of purchase, that is at the till, so that you can. Now imagine that somebody goes in and they go through a spaza shop and they buy a trolley full of stuff, and it's now 1,000 rand, and he's got 1,000 rand to pay, and then at the till they say to them, listen, you've got to give me, please, 0.5%. So it's now going to be 1,000 rand plus 0.5%. Now I'm going to pay that. What do you think is going to happen? No, but SARS said, I've given me approval to ask the extra money from you. Well, do you think that's going to be happiness? And now you've got to have people to administer this? How? So this notice should be prominently displayed at all entrances to the premises where the goods or services are displayed for sale, at all points of sale where payments are effected or tax invoices are issued, in all other places like the business premises where contracts for the supply of goods may be concluded, in all forms of print and electronic advertising medium or websites. That's your price tickets. All right, what happens if a customer accepts a quote which I issued before the VAT rate increased? When you issue or receive a quote, order, or purchase order, the time of supply is generally not triggered. It will therefore not influence the VAT rate that applies to a transaction. You may increase the price to take into account the increased VAT rate if you choose. The same applies if you tendered for a contract. It's obviously just communication, 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 but you've got to know in your quotes what they will be. So if you quote, so for example, we will quote, we'll say, okay, we'll charge you 1,000 Rand per hour plus VAT at the standard rate. That's easy enough, as applicable from time to time. That's my quote. But if I say I'll charge you 1,000 Rand including VAT, and then you accept it, and then I render the service later, and then that's 1,000 Rand. What are my responsibilities if I do not have enough time to change my business systems to accommodate the increased VAT rate? I'll say, sorry for you, go and apply the VDP and do corrections. Okay. If my contract is a bit vague, or if I have a dispute with a supplier or customer, can I approach SARS for a ruling? No. SARS will not get involved in any contractual disputes. Your problem. Will the VAT 201 returns be amended in time so that vendors can correctly report for the first period after the increase? Yes, the returns will be amended on time. So yes, SARS is going to amend it. We now need VAT return with effectively, if you're actually pushing through fixed asset transactions, you can have 14% transactions, 15% transaction, 15.5% transaction, and a 16% transaction in a year's time. What rate must be charged on the sale of face value vouchers? So if a voucher is not deemed to be a supply, it's just cash. In actual fact, in terms of the Consumer Protection Act, it's still deemed to be your money. So the VAT rate will apply on the date that you apply the voucher. So that is vouchers. When I issue debit and credit notes, so you've got to be very careful when you issue debit and credit notes. So if I issued tax invoice to a client, if I've issued a tax invoice to a client, and it often happens in our life, we'll have clients which consist of maybe a group of companies. There are maybe 20 companies, and we issue the invoice to a particular company, a tax invoice, we charge 15% VAT on it. The client comes back and says, sorry, don't charge that entity, charge the other entity. Then what I've got to do is I've got to issue a credit note to that entity that's still going to be at 15%. Now, because I'm in services, I have to now issue the invoice to the other entity. I'll have to do that again at 15%, even if I may do that now after 1 May, because I've already agreed but now I'm going to be stuck in a problem, because now I've got to prove to SARS if they order this, this at 15%, not the 15.5%. So when you're issuing credit notes and debit notes, it's going to be very difficult. If you have a debit note where you just say, okay, sorry, I invoiced the wrong amount, and you issue a debit note, then you will just charge, that will just be, again, at 15%, not at 15.5%. But you've got to look at it from a different perspective. So be careful on debit notes and credit notes. So often, I see very seldom companies issuing debit notes. The systems are generally done in such a way that you will credit note the original invoice, and that you'll issue a new invoice for the correct amount or the correct quantity or whatever it is. Debit notes very, very seldom gets issued into ERP systems. Okay, when I write the bad debt off as irrecoverable debt, obviously you've got to know what value, what is the VAT component of my debtor's value, so that you can claim that back as a input tax as a bad debt. Now, again, that makes it so difficult. Many entities doesn't know that, because you will now be, again, a municipality. And a municipality, obviously, that's actually a poor example, because they are registered on a payments basis. But let's assume you are like a co-op. A co-op does that often. They'll have an account with a farmer. And on that account with the farmer, they would have sold them stuff at 0%, would sold them stuff at standard rate, they would have sold them, they would have provided infrastructure to them, all of those kind of things. At the end of the day, there's 5 million Rand lying there. There would be interest on everything. Now that 5 million Rand, you now write off. He's now insolvent. And you write it off and you want to claim the VAT as a bad debt. You've got to know what component of that 5 million Rand is VAT at 14%, at 15%, at 15.5%, at 16%. Fine. I provide monthly consulting services to a client for a fixed fee. So again, now, so we say, okay, we will monitor e-filing on a monthly basis for a fixed fee. Then I have to apportion that on a reasonable basis. So again, have a look at what the slide says. again, on building services, you can see these examples, and obviously this will be distributed. Please have a look at that and those examples, because it will show you how you must do certain work. Yeah, sorry, apply the VAT to certain situations. Your services particularly is a problem because of this fair and reasonable basis on which you need to apportion the VAT on your services. Okay. Even if you issue the invoice afterwards, and often ERP system doesn't allow you to issue an invoice, it will just say it's VAT. What's the VAT rate? It will pull the VAT rate out and it will take it through. Yeah, this is again the same thing. This is the progress. If you have a construction contract, and remember your time of supply rules comes in, your special time of supply rules for progressive supplies. It's the earliest of when payment is due, when payment is made, or when you issued any invoice. So you will then apply the VAT rates. In this example, 14% is applied on all the progressive payments due before the implementation date, and at 15% thereafter. Obviously, we'll have to apply the same thing. All right. I receive a bill for my television license for the year in advance. Obviously, when you receive it in advance, the time of supply has been triggered, so you pay VAT at 14% because it's the earlier of receipt of an invoice or the date of payment. So even if you now pay it after this date, you receive your television license, your invoice, you received it at the beginning of the year, but you only pay it in June, still only payable at 15%. All right. When you import goods, just they are saying you need to inform your staff of the VAT rate increase and that they should be vigilant in checking any calculations or documentation in relation to imports in progress or any future imports. So, because obviously there is VAT on importation and there is VAT on the services charged by your agent. And all of that needs to be managed either 15% or 15.5%. So Charles is elaborating on that. From when will the new VAT rate of 15% be charged on municipal services? So that becomes very, very difficult because obviously municipalities are registered on the VAT basis for payment basis. Now, the problem comes in is that your water consumption and your electricity is not measured at the end of the month. There is not somebody that comes around and check your water at 30 April. There's somebody constantly. So your cycle may be from the 5th to the 5th and the 10th to the 10th. And then how does that then happen? Because they've delivered already the goods to you and they will check the water and then invoice you. In practice, they'll just charge you VAT at 15.5% on the date that they will invoice that amount, because that's the earliest of issue of the invoice, or when it is it becomes due, and that is on the date that they've invoiced you. So even though you've consumed the water before the effective date, you will pay VAT probably at the increased rate if they only invoice you after that date. There's no other practical way to do that. All right. So what happens if I paid in advance for goods early in February 2018, but the goods will only be delivered to me in April 2018? The normal time supply rules apply. Earlier of payment being made or an invoice issued would have triggered the time supply in February 2018. The suppliers will therefore be charged at VAT at the rate of 14% and no adjustment to the price. Okay. Yeah, my convenience store is open 7 days a week, 24-hour day. You've got to do it middle of the night. All right. There's a lot of examples on things like estate agents, administrators of estates. The services that I render as an administrator of estate involves the performance of a number of activities over a long period of time. Before I can submit a claim, issue an invoice for my services, how will I know what rate of VAT must be charged? So please look at that, because my mother passed away last year in June, and the estate is not yet finished. So the executors are still doing the work, and then at the end of the day, they will take their fee. That fee they need now to apportion on whatever work they did before that date and after that date. But how? Because is it on time based? Is it not on time based? Because they just take a percentage. They just say, okay, yeah, this is the estate. I'm taking 1% of the estate, or whatever the value of the estate. I want to pay VAT on it. Now that it gets finalized in June, but they've done all the work before the increase. They should only be charging us at 15%. They're going to charge us at 15.5%. Because how do they do it? They're saying, no, you've got to do it on a fair and reasonable basis. And the same thing applies on estate agents. So please look at, if you're in that industry, you have to look at these transitional rules and these frequently asked questions, because it can be very, very difficult. What rate must be used for the deemed supply in Section 827, where an excess amount in respect of a taxable supply is not refunded within 4 months? So Section 827 is that when somebody double pay an invoice. So I've issued somebody with an invoice for 100,000 Rand, and erroneously they pay me that invoice twice. And I keep it, debtors on credit. So obviously there is a supplier that paid me double. 4 months afterwards, that is now deemed to now be a taxable supply. So even though they've double paid an invoice when the rate was at 15%, when that time of supply gets triggered under 827, I've got to pay that at 15.5%. All right. So on the double invoice, I've got to pay that on it. If I have a Section 2023 is that if I have an invoice and I've claimed the input tax and I have not made payment within 12 months, then I must recoup that. You must obviously recoup it at 15%, not at 15.5%, because it's a reversal of the VAT that you previously had. All right, so I see we've gone about 6 minutes over our time already. So I think I just want to see if there are a few others. Professional membership, they're dealing with that one, your SICOS, SIBOS, site, and all of these kind of places. They generally applied on the payments basis, but remember, again, you go back to your normal rules. It's the earliest of when you receive the invoice, received payment, or has issued an invoice. So there are special rules for that. Again, there is a long supply. This is your estate agent rule, and this is a maddening example. So, but please look at that. If you are an estate agent or if you're advising an estate agent, please look at that rule 52. If you're unable to change your systems, sorry, go for a VDP rule. And this one is if I lease offices to tenants and I recover certain expenses, municipal charges. You always have to look, if you're a landlord and you're recovering costs from your tenants, you have to look at whether you are recovering it as part of your rental or whether you are recovering it as agent on behalf of them. So, for example, you may have fuel for the generators, that you incur the generators, but you say to them, your rental will be so much, plus I will charge you for any fuel. I'm not selling fuel to them. I'm providing a building with electricity. So I've got to charge VAT on that fuel because I'm not purchasing the fuel as agent on behalf of 20 tenants. I can't do that. So I've got to charge VAT on it. The same applies for my municipal rates. Municipal rates is zero rated, but it's a cost that is linked to the cost of the building. So if I recover municipal rates from my tenant, then I have to charge VAT at 15 or 15.5% on that. But electricity may be different. I can have electricity that's specific. I can monitor how much electricity every tenant is using. I'm paying the electricity to the municipality and I'm linking it all up and I'm saying I'm recovering. I'm only paying that as your agent and taking it through. But it can be very, very difficult because can you really argue, you've got your landlord and you've got one big electricity bill. Even if I know who's using it, can I really say that my relationship with the municipality is that as agent on your behalf? Because the municipality says, no, sorry, you're liable for that. So I'm not always in agreement with the way that they've done these examples. All right. So that is important. This one is also paragraph 58 is where you receive advance payments for accommodation. So again, your time supply becomes quite important. You may have, if you receive a deposit for clients that's going to come to your hotel in December, that deposit doesn't attract any VAT. When you apply the deposit in December as a rock up, you've got to pay VAT at 15.5%. Right. So even though you've received the deposit now, if you've received a part payment now, you've got to pay VAT at 15% on the part payment. And obviously, because that's what you have now received. But you have to look through the different examples as well. All right. Sorry, I just want to see whether there's anything else that I think I should bring to your attention. I don't think so. I think we've gone about 10 minutes over our time. I want to thank you so much for your attention. Let me just quickly see whether there's any questions. Um, all right. I'm not seeing any questions. Emil, are there any questions that you can see?
Yes, yes, Johan. There are about
Oh, there's
17
under the more.
questions. Yes, question and answer section.
Okay, sorry, I've got it now. Um, okay, there's Greta saying with the percentage VAT increase, will SARS issue the VAT 201 with changes for VAT input and output? Accounts receivable is going to nightmare. Agree? Yes, they will change the VAT 201. And yes, I agree with you. It's going to be absolute nightmare. Isn't the 3-year tax rebate freeze equivalent to not adjusting the tax brackets? Or are they not just rewording it? I would assume that you're talking about the 3-year that there's no rebates on the medical aid and that there's no changes there. Um, I agree with you. It's probably just potato. That that's the same thing. Greta, the increase is zero-rated item population is not better off because the retailers push the price up. Yes, Greta, that's a very valid point. The documentation issued in the budget actually says that the zero rating of those goods are not necessarily passed on to the customers. There's probably just a 0.5%. They should actually drop the price by 15% of that, but they'll just keep it the same. So what they'll do is they'll probably absorb a bit of the 0.5% on the others with not adjusting the price on these things. Hopefully over time it will make it a bit more competitive, but you're 100% right. This is exactly what the minister also said in his speech. So what happens if your client has been issued with a government contract signed last week but kicks in on April 2025? How will the VAT portion work? Again, it depends on what kind of contract you have. If it's services, you'll have to charge the VAT according to, you've got to portion it based on the services. So government themselves have got to abide by it unless your contract government says, listen, this is fixed and I will bear the cost of any VAT increases or decreases, but they actually have to pay you more. Normally, government contracts are price plus VAT, and because government contracts will say, well, VAT is in and out, so that you normally quote for government contracts VAT exclusive. What happens to the VAT charge and invoices issued at 15.5% if Parliament turned down the increase when the bill is finally approved? That's an interesting one, Peter. So Peter is saying that what happens if Parliament doesn't approve it? If it gets announced at budget level, it's what we call substantially enacted. So when the VAT rate when the income tax rate, corporate tax rate, decreased from 28% to 27%, the assumption is that it has been substantially enacted. And at the end of the day, Parliament doesn't have much of a choice than just to approve it. And therefore, when you do it from an accounting perspective, you would do, for example, if you had a February year end, and in February you had the announcement made of reduction of the VAT of the corporate tax rate from 28 to 27%, then you did your current tax at 28%, but you did your deferred tax at 27% because it said you were substantially enacted. So where we now is legislation that is substantially enacted. There is a chance that they will say no, but I mean it comes into effect on 1 May. So yeah, so that will be pushed through. Yes, Sipiwe, the threshold is still R1 million. Yes, I'm 100% agreement with you. That R1 million is just like a nothing. For me, the issue is more on the turnover tax. The turnover tax threshold is also not changed. All right. If I invoice a client every 2 months for the subscription of software used, example, invoice in May for April and May, will the invoice at the end of May sent to the client be 15% for April and 15.5% for May? Let's just look at that. So it will depend on whether it is retrospective invoicing or prospective invoicing. So if I was to, let's just see what you're saying. Invoice in May for April and May. Okay, so it is after the fact. So the way that I understand it, if this falls under services, and generally the provision of software falls under services, not falls under goods, then you will have the April side will be at 15% and the May side will be at 15.5%. Again, good example, Maria. That is a good example of how difficult it's going to be to actually apply. SARS is saying you can issue two invoices, and you can issue 2 invoices, probably the easiest. Carmen, this is totally insane. We are literally killing ourselves paying to enrich the government. Yes, and we are killing ourselves because who's going to pay for this? The effort to do this. Again, I mean, if you ask, we as Creston, we do a lot of outsourcing for clients for VAT. Now, we've got to minister it. It's going to take more time. We're going to say to clients, listen, you've got to pay us more because we've got to spend more time on this. And then it's going to reduce the corporate tax income. You do that twice. That's for me is the madness. If you then decide let's increase it to 16%, but the bullets to push it up to now. That's such a political one. Thank you, Carmen, for the kind words. Thanks, Gopal, for that. Debbie, nice seeing you. Thank you very much, Debbie. It's nice that you participate in this. Always appreciate you, Debbie. Used to be a partner of me at KPMG and one of the most brilliant tax professionals in the country, professor at the University of Cape Town. So, Deborah Tickle, thank you so much that you join us. Thank you to everybody. Thank you, Billy. Nicolene, thank you. And oh, sorry, there's anonymous. I'm referring to individual income tax rebate freeze over 3 years. Yeah, it's all about just getting more money. That 18 billion rand out of the personal tax side. And as I said, that's the biggest side of it. I think I've answered most of them. Emil, you agree?
I agree, Johan. Yeah, it seems like we've tackled all the questions for now. I just want to remind the audience that you will get your CPD certificates, a recording, and a copy of the slides at the end of next week. So we'll send mailers out, and then we'll also send mailers out for the next tax chat. Thank you, everyone.
Thank you. Thank you, Emil, for all your arrangements. We really appreciate it. And thank you, everybody, for your support. Have a lovely day and start working on your VAT returns and your VAT systems. Goodbye.